It has been an exciting week here on Florida's Space Coast. We had a Falcon Heavy launch yesterday and landing, 2 landings to be precise. Of course, Julian Assange was freed, and we're going to stack some of the cheapest sats we have been able to stack in a couple of months. We will talk about all of that and more on this episode of the Bitcoin Bulletin Podcast.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
It has been a beautiful day here on Florida's Space Coast. We had a little bit of a break from the rain the last day or so. This afternoon was solidly in the mid-90s. I don't know what the exact temperature got up to, but it was warmer than 90 degrees. For those of you who don't do Fahrenheit, that would be somewhere between 32 and 35 degrees Celsius, depending on how close you were to the beach. Fortunately, the afternoon thunderstorms came right on cue and cooled things down a bit. Of course, we had the Falcon Heavy launch. SpaceX launched their largest rocket, their largest operational rocket, if you don't consider the test launches they've had with Starship to be an operational rocket. But the largest commercially available rocket, the Falcon Heavy, which is basically 3 Falcon 9 rockets strapped together. And they launched the latest generation of the GOES weather satellites, GOES-U. And I tweeted out a link to the video of both the launch and the landing on the Bitcoin Bulletin Podcast Twitter feed. We're at BTC Bulletin Pod if you want to check out that launch. But basically, when the Falcon Heavy goes up, they expend the middle Falcon 9 rocket core, but the 2 side boosters return to Cape Canaveral Space Force Station for a landing. They landed pretty much about the same time. And of course, whenever the rocket comes back, you get a couple of double sonic booms. In this case, we had 2 double sonic booms after the launch. It came about 20 to 30 seconds after the landing from where I was watching the launch on the beach because, speed of sound, I was several miles away from the landing zone, so it took time for the sonic booms to reach us. Obviously, sound travels slower than light, but of course, I'm getting ahead of myself. There's actually a lot of Bitcoin news to get into today, but before we do, of course, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 849,615, and Bitcoin is ringing in at a US dollar value of $60,810 per Bitcoin. And that means that we're going to get 1,644 Satoshis for every fiat dollar that we convert into Bitcoin today. And that's almost 100 sats per dollar more than we got last DCA Wednesday. So we're looking at about 2,000 sats more this stack than last DCA Wednesday just because Bitcoin is on sale. They often say BTFD, buy the freaking dip. And of course, dollar cost averaging, you're a little more steady. You're investing precisely at the same time, the same increments. I'm getting way ahead of myself. But obviously, in addition to our DCA stack, it's nice to BTFD, but today our DCA stack is going to be buying the freaking dip. So that's really cool. It'll be nice to get some more Satoshis. For those of you who care about such things, Bitcoin's current US dollar value gives it a market capitalization of $1.2 trillion, still solidly over that $1 trillion mark, which is kind of a magic number. I often said in the past that humans like magic numbers. They like nice round numbers. If you remember, there have been multiple episodes where I've quoted the movie The Right Stuff or the book The Right Stuff, where they talk about Chuck Yeager breaking the sound barrier and then Scott Crossfield going Mach 2 for the first time. And the one character says to the other that Yeager will just go back up and go Mach 2.1 or whatever. And they said, yeah, but the public doesn't really care. Mach 2 is the magic number. And I'm butchering the quote, but the point being, human nature, human psychology, people are kind of drawn to nice even round numbers. And 1 trillion was that big, nice, even round number because, a trillion is a gigantic number and there aren't any assets that are worth more than trillions. So at least until they completely hyperinflate the US dollar away, because I remember a time when $1 million was a lot of money. And nowadays, if you're a millionaire, quote unquote, you can't even afford a house in California. So then billion became an obscene amount of money. And then only when you're talking about total financial assets or the amount of money that the U.S. government wastes does $1 trillion just seem to be like a small number, just any old number. But again, I digress. To put that in perspective, $1.2 trillion would put Bitcoin, if Bitcoin was a company, if it was a stock, it would make Bitcoin currently the 8th largest company by market cap. The top 10 companies are currently as follows. Microsoft is currently ahead of Nvidia with a market cap of $3.31 trillion. I think they've traded places a couple times this week. But for perspective, that's almost 3 times larger than the market cap of Bitcoin right now. Of course, Nvidia is right behind Microsoft with another $3.217 trillion in market cap. Again, almost 3 times the market cap of Bitcoin. Number 3, right in there below Nvidia, is still Apple with another $3.215 trillion. Alphabet's behind them with $2.19 trillion. Number 5, of course, is Amazon with $1.94 trillion. Number 6 is Saudi Arabian Oil Company with $1.78 trillion in market cap. Then you have Meta at number 7 with another $1.27 trillion. Berkshire Hathaway comes in at number 8 at $884.87 billion. But if Bitcoin was a company, it would be in front of Berkshire Hathaway right there in that number 8 spot. Rounding out the top 10, Eli Lilly comes in at number 9 at $842 billion. And Broadcom has $807 billion in market cap, meaning just the top 10 stocks traded on the U.S. stock exchanges have a market cap of $19.45 trillion, more than 16 times the market cap of Bitcoin. And I, for one, don't think it would be that hard to conceive of Bitcoin being at least as valuable, if Bitcoin having soaked up as much investment, as much fiat value as the top companies on the stock exchanges. Obviously, if Bitcoin's going to be the global reserve currency, if we achieve hyper-Bitcoinization, Bitcoin becomes in use around the world more commonly, that would be a no-brainer. Even gold, even if Bitcoin just becomes digital gold, gold has a market cap right now of $15.7 trillion, more than 13 times Bitcoin's current value. So just for Bitcoin to live up to digital gold, which it already is, it's already doing everything gold does and doing it better. But I mean, when the normies embrace Bitcoin as digital gold, when there's as much normal investment in Bitcoin as there is in gold, Bitcoin would have to have a market capitalization of $15.7 trillion. It would have to be 13.2 times more valuable than it is today to achieve that. And imagine Bitcoin 13xing from here, and that would be just to surpass gold. We're not even talking, surpassing the top 10 companies on U.S. stock exchanges. That would be at least 16x from where Bitcoin is right now. But again, I'm getting kind of a little bit sidetracked here. It's just a lot of people think market cap is a useless statistic. I think it is a valuable statistic just because it shows how far Bitcoin has to go if it's treated, if it's viewed through the same lens as any other traditional financial instrument or traditional investment. And speaking of gold, for those of you who value your wealth in shiny yellow rocks, it will currently cost you 26.5 ounces of gold to purchase just 1 Bitcoin. That is a lot of those 1 ounce shiny gold coins, even if you can buy 26 1 ounce gold coins, because most people that invest in Bitcoin, they invest in gold, they own paper gold. They don't actually have gold bars or gold coins in their safe. And if you do want to put gold coins in your safe, you're not going to get gold at what its current price is because there's just not enough of it. Because gold has been captured and gold has been financialized, most of the gold that's trading out there is basically fiat gold. And that's something that Bitcoin fixes as well. For those who value your wealth in pizza, 1 Bitcoin will currently purchase you 3,401 large pepperoni pizzas from Papa John's. That is still 1 pizza a day for more than 9 years. And of course, there's been some fluctuation in there because as Bitcoin's US dollar price has been volatile, so has its pizza value, fluctuating anywhere from almost 4,000 pizzas to where we are now at 3,401 pizzas. But of course, if you zoom out, the number of pizzas that 1 Bitcoin would purchase also continues to go up and to the right as everything trends down in Bitcoin terms. And as I've hypothesized, I think if you did try and spend all of your Bitcoin wealth, if you had a full Bitcoin to spend on pizza, and you did try and spend it purchasing one large pepperoni pizza a day from Papa John's, obviously by the time you would have gotten to your 3,401st pizza, we'd be more than 9 years from now. We'd have completed this upcoming bull run. We'd have had the next halving and that bull run, and we'd be at another halving after that, and looking at the bull run from 2 halvings from now. And who knows what the price of Bitcoin will be then. Obviously, if history repeats, it will be worth substantially more. So the hypothesis being, before you could ever spend your final Satoshis on pizza, the value of that Bitcoin would have increased so dramatically that you could basically never blow an entire Bitcoin on pizza. Trying to eat it one pizza a day, at least, maybe if you decided you were going to buy out Papa John's. But remember on Bitcoin Pizza Day, I think it was, we spoke about the market capitalization of Papa John's, and how basically the market cap of Bitcoin was greater than the market cap of Papa John's significantly. And that I guess eventually one day, if Bitcoin does achieve hyper-Bitcoinization, one Bitcoin will probably have a greater market cap than the entire market capitalization of Papa John's. Again, another huge tangent. That metric that has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate, is down quite a bit from last DCA Wednesday, the last 2 DCA Wednesdays, at 5.94 transactions per second. And that, once again, is perfectly consistent with what I've observed during the history of this podcast, that anytime transaction rate is trending down, the price of Bitcoin has been trending down, and that anytime the price of Bitcoin is trending up, you see a corresponding increase in the transaction rate. That's a little bit counterintuitive, because you think that there would be a lot of Bitcoin activity on chain when the price is trending down too, particularly if the price is trending down because people are moving Bitcoin to the exchanges. Again, we'll get into that a little bit here in a few minutes, but you have to move Bitcoin to sell it, just like you have to move Bitcoin to buy it. But for the almost 3 years now we've been doing this podcast, it's worked out that anytime the transaction volume has been trending up, the price has been trending up. And anytime the transaction volume has been trending down, Bitcoin's price has been trending down as well. So just anecdotal evidence, not any kind of official TA, just something that I've noticed while doing this podcast. Just because I look at the statistics, I read the statistics every week, and I write them down. And so I've seen that trend. And speaking of on-chain activity, the mempool is a little bit busier than it was last DCA Wednesday, but not by much. Clark Moody's dashboard is showing 168,449 transactions in their mempool, up from about 153,000 transactions last week. And mempool.space, with their slightly larger mempool, is showing 216,676 transactions in their mempool, and that's less than 1,000 transactions up from where they were last DCA Wednesday. So a little bit less movement in mempool.space's mempool, but still down significantly from where we were 2-3 weeks ago, when mempool.space was showing more than 300,000 transactions pending in their mempool. Along those lines, it has gotten a little bit cheaper to transact in Bitcoin on-chain. If you're looking at the fee estimator on Clark Moody's dashboard, they're saying that to guarantee that your on-chain Bitcoin transaction is included in the next block, you need to include a fee of 25 sats per VByte, and that if you have up to a day to wait, a fee of 8 sats per VByte will be mined within a day. If you have a little longer to wait, perhaps a week, they're saying a fee of just 7 sats per VByte will be mined eventually. Mempool.space is telling a slightly different story. Oftentimes it disagrees with the estimator at Clark Moody's dashboard. They're saying that right now, a high priority transaction only needs a fee of just 9 sats per VByte to be mined in the next block or two. That works out to about 77 cents. That's down from the 20 sats per VByte, or about $1.82 last DCA Wednesday. Of course, we did our last DCA Wednesday episode a little late, so the day I actually recorded our DCA Wednesday episode, just a couple of days ago, it was a little bit cheaper than it is right now. It worked out to about 68 cents to guarantee your transaction was mined in the next block or two. But mempool.space is now saying that a fee of 9, they're recommending a fee of 9 sats per VByte for any transaction, whether it be one that you want to get in the next block, whether it's a medium priority, a low priority, or a no priority transaction. They're all recommending 9 sats per VByte. So Now is about as cheap as we've ever seen it to do an on-chain transaction. So if you're still one of those people that has been procrastinating, consolidating your UTXOs, and you were worried when prices went through the roof that maybe you were going to get stuck with some unspendable UTXOs that were so small that the mining fee to move them to an exchange would be, or to a hardware wallet or wherever to spend on coffee, the fee would eat up most, if not all, of that UTXO. So if you were panicked just a week or two ago when that was happening, consider now as a time to maybe do that consolidation, because fees have retraced a little bit. And as I've observed, fees usually tend to drop off a bit when it's the night in Europe or in the United States, or particularly over the weekend, especially weekend nights when it's the nighttime on Saturday, for example, in the United States or Europe. So fees may even get a little cheaper, but 9 cents per VByte is pretty darn cheap. I would feel comfortable sending a fee in maybe the 7 or 8 sat per VByte range and seeing if it got confirmed. If I had any consolidation transactions I needed to make, which I don't. I took care of all the consolidation I wanted to do before prices ran up and got insane. But if you haven't, keep that in mind. All right. Since last DCA Wednesday, we had a difficulty adjustment in the difficulty it takes to mine the next Bitcoin block. Again, since I did that episode late, when I did the recording, we had already had the difficulty adjustment, and I spoke about that on our last episode. And that happened after DCA Wednesday, but not after the podcast. So that was the first time in months, and I think only like the third time ever, we basically had a no difficulty adjustment. We had a 0.0% difficulty adjustment according to Clark Moody's dashboard. And as it stands, we're now 1,137 blocks away from the next mining difficulty adjustment. If you're not familiar, the Bitcoin protocol adjusts the difficulty that it takes to find the next block every 2016 blocks, which works out to about every 2 weeks, with the goal of having Bitcoin blocks come in on average of once every 10 minutes. And when they come in a little bit too fast, the difficulty is increased to slow it down. And if they're coming in too slow, the difficulty is decreased to speed things up. Since hash rate in general has been trending up and to the right, just like Bitcoin's price has, usually, more often than not, we've seen increases in Bitcoin's hash rate, which is why you used to be able to mine Bitcoin on a laptop, and then you were able to mine with a GPU, and then you had to go start using specialized ASICs to mine Bitcoin, and then those ASICs have gotten, progressively more powerful. Even 4 years ago, when the state-of-the-art ASIC was, the Antminer S9, that was about 14 terahashes, and now the latest generation Antminers, the 21 XPs, I believe, are in the 300 terahash range. So as more hash rate is poured onto the network, usually we've seen difficulty increases. Often, not completely unheard of, though, there have been occasional pullbacks, like, for example, a couple of weeks ago when we had the extreme heat in the southwestern United States and the miners in Texas curtailed their mining so that they could sell that power back to the grid so that people wouldn't have rolling brownouts, that they could run their air conditioning units. We saw a difficulty decrease for a week or two before things returned to normal. And in about 8.5 days, approximately July 5th, we're going to see another difficulty decrease. At least if things continue to trend as they currently have. We still have more than a week to go. Anything can happen, but apparently a lot of mining power must have left the network, probably because, like I said, it has been really darn hot in the United States again. But at the time of this recording, according to the two sources I get my data from, we're looking at a mining difficulty decrease, a big one potentially, of anywhere between minus 4.06% to 7%. And that is because blocks have been coming in at an average time of 10 minutes and 46 seconds. And while that might not seem that slow, because, if you send a transaction, you want to purchase some coffee, or you want to consolidate those UTXOs like we just spoke about, waiting 10 minutes or waiting 10 minutes and 46 seconds, you probably wouldn't even notice that unless you start a stopwatch and count. And again, those block times are an average. So, you could send that transaction and it could get confirmed in a minute, or it could take an hour. That wouldn't be unusual at all to have a block time of an hour or more. I mean, that does happen from time to time because, again, It's the average of 2016 blocks that they're looking at to get that 10-minute average. But currently, 10 minutes and 46 seconds is slow enough that the Bitcoin protocol would, if things stay the same, if the difficulty adjustment were right now, we'd be looking at a significant difficulty increase. Again, that really only matters if you're a miner. If you're a miner at home, your mining might get 4 to 7% more profitable. If you're a big miner, a commercial miner like Riot or Marathon, and you're mining millions of dollars of the Bitcoin, 4 to 7%, that's a big deal. I mean, imagine any company on Wall Street, if their profits were to increase this quarter by 4 to 7%, their stock would go through the roof. So if you're a large commercial miner, maybe you're salivating about that. Unless, of course, that's because you're sitting on the sideline, not running your miners because of the heat wave, in which case you can't wait to get those miners turned back on to soak up some of that easier Bitcoin before the difficulty would ultimately increase again. Currently, it's looking like there's an estimated 574.1 exahashes securing the network, and that is down from 597 exahashes last Wednesday. So about a 23 exahash decrease in hash power, and that is nothing to turn your nose up at. Obviously, that's about 4 to 7%. If you look at the, without doing the math, if you just look at the difficulty adjustment estimator. Either way, TikTok next block, Bitcoin is doing exactly what it's supposed to do. This is just business as usual as far as the Bitcoin protocol is concerned. Real quick, I want to take a minute to thank those of you listening on your favorite podcasting 2.0 app, such as Fountain. Fountain not only lets you support your favorite podcasts through the value for value model by either streaming sats or boosting sats to your favorite podcasts, but you can even earn sats by listening to your favorite podcasts. That's kind of randomized, but the way it is currently is randomly they will assign a number of sats that you'll earn for the first few minutes of any podcast you listen to every day. I think they reset it at midnight UTC. It seems to reset before midnight here on the East Coast, but I don't know that for sure. Last night, for example, I didn't earn any sats by listening to my favorite podcast, but the night before that, I earned 2 sats per minute for the first 30 minutes that I listened to a podcast. So I got 60 Satoshis for listening to a podcast I was going to listen to anyway. And while that might not be a lot, you can pass those sats along. You can help support podcasters. And instead of podcasters having to rely on commercials, on sponsors, where they're trying to sell you products, like, don't even get me started, on the podcasters out there that were shilling things like Ledger and BlockFi, etc., because that's how they were supporting their podcast, paying the expenses, because, it isn't free to run a podcast. It's not expensive to have a podcast when you're just a small pleb like me, and, you just, basically it's your time and a microphone. But, the larger podcasts, they can spend a lot of money, especially the one that is often referred to as what Ledger did, or used to be referred to as what BlockFi did because of their sponsorships, and never actually even apologizing for shilling BlockFi right up until their bankruptcy. But I digress. My point is, you can support your favorite podcasts by streaming sats in lieu of them relying on advertisers or sponsors. And you can do that in one of two ways. You can stream sats on a per minute basis. For example, if you think it's worth 1 or 2 sats per minute for the value that I'm providing you in this podcast, you could set it up to where you set it and forget it, and you're just going to stream me 1 sat or 2 sats or 10 sats per minute. So in an hour, you would stream 60 or 120 sats, which is, a penny or two, just a couple of cents. But, every little bit adds up. And again, that's up to you. You determine the value provided in the value per value model. Of course, my favorite way, and most podcasters' favorite way, is by sending a boost. And instead of just sending 1 or 2 sats per minute, you send 1 Lightning transaction and you tip, basically, or support whatever it is that you feel appropriate to your favorite podcast, but you send a message along with it. So it's kind of like a shout out, like Rabbit Hole Recap used to read weekly shout outs where they weren't doing boosts at the time. That was before boosts, where I think they had a website set up with a BTC Pay server, and they were selling shout outs like 25 or 50 US dollars in either USD or Bitcoin, and they would read it out on the air. Well, this is similar, only you're streaming sats directly to your favorite podcast. And then, of course, like most other podcasts, we read those boosts out on our next episode, on our forthcoming, or the next episode to come out after we receive the boost. And we haven't received any boosts for the previous DCA Wednesday episode that I just did like 2 days ago. But we did have one boost from the episode before that, and I read it on the previous episode, but because that didn't come out on time, it came out kind of in between that Wednesday and today. So maybe there's a possibility that they didn't actually even listen to that episode. So I'm going to go ahead and read that boost again today. And that boost is from Leggy, and Leggy sent 3,000 sats and said, "Let me try something, ... And I posited last time I read this, I'm curious, Leggy, what was it you tried? And did it work? Because I haven't gotten any follow-up. I sent you a DM on Twitter, by the way, Leggy, asking what you were talking about. If you hit us up on Twitter, on X, of course, at our Twitter feed, our Twitter account is at BTC Bulletin Pod, or send me an email at bitcoinbulletinprotonmail.com and let me know what was up, because I'm really, really curious. And I know your profile picture is what looks like a cat, so they say curiosity killed the cat, and I am certainly curious. But either way, thank you for the boost. Thank you for the support. Thank you for all of your support. Leggy's been a tremendous supporter of the podcast, easily our biggest supporter, having both streamed us sats on a per minute basis from time to time, but usually boosting. And I've read all but one of those boosts, I believe, on this podcast, as I promised to. And of course, if you don't want us to read your boost on the podcast, say so in the boost, or DM me or something to let me know, because if you don't, I am going to read that boost. So if it's something that you want to keep private, probably don't put it in a boost anyway, because other people can see those boosts. But if it's something that you don't want me to read on the air, make sure you say so, because otherwise I will read it. And speaking of our listeners, our geographic distributional listeners had a little bit of a shakeup last week, and we've had a little bit of a change again this week. Our top 10 listeners by country are as follows. Number 1 remains the United States, where more than half of you are listening. So thank you to all my fellow Americans listening out there, regardless of where you're listening from, whether you're here in Florida or in Wyoming or Texas or New York or California, wherever you may find yourself. Number 2 remains Argentina, so muchas gracias, amigos, in Argentina. Number 3 remains Germany, so Dankeschön, mein Freund in Deutschland. Number 4 remains Canada, so thank you to our friends listening in America's attic, up in the not frozen white north right now, where it's probably absolutely gorgeous. Number 5 remains Luxembourg, so Dankeschön, mein Friends in Luxembourg, or Morien, to those of you who speak Luxembourgish. Number 6 remains Spain, so muchos gracias, amigos, in Spain. Here's where this week's change is. Number 7 is the United Kingdom. Last week, the United Kingdom had been bumped completely out of the top 10 and was all the way down at number 11. But since then, our friends across the pond in the UK must have gotten busy listening to episodes, because you are back at the number 7 spot. So thank you to those of you listening in the UK. Welcome back into the top 10. Number 8 is Venezuela, so muchas gracias, amigos, in Venezuela. Number 9 is Colombia, muchas gracias, amigos, in Colombia. And number 10 is Mexico, so muchas gracias, amigos, in Mexico. That means Australia has fallen out of the top 10. So the UK lurched back into the top 10 and knocked everything else down one rung, which bumps Australia to the number 11 spot. So Australia broke into the top 10 for the first time last DCA Wednesday. Actually, I think it's the second time. A few months ago, maybe a year ago, Australia surged into the top 10. But for the first time in a long time, Australia burst into the top 10, and you're just right there below the top 10 at number 11. So if you're listening from Australia, thank you for listening. Whichever friends or family members you helped orange pill that maybe you had tune in to an episode of the Bitcoin Bulletin Podcast to help bump you into the top 10, call them up, hit them up, tell them to listen to the podcast, because you need their support to get back into the top 10. I tease, of course. You're all equally important. Every pleb is as important as every single Satoshi is to the Bitcoin network. No Satoshi is greater than any other Satoshi. And it's really, really flattering that we have listeners all over the world, because I can see where all of our listeners are basically all the way down to the minutia, not just the top 10. And we literally have listeners in almost every country you can think of. I can't name a country right now where I know we don't have any listeners, or at least haven't had listeners in the past. And that's really, really cool. It's also really, really flattering that so many of you all over the world take the time to listen to me ramble on about Bitcoin once a week, if not more often. All right, on to the news. I think the biggest news of the week was that Julian Assange was freed from prison after 14 years, entering a plea bargain with the United States government, which basically let him go he had to plead guilty, and then they gave him time served because he's been in prison and jail in one place or another for 14 years, and I think they sent the plea bargain was he pled guilty. He was sentenced to 5 years in prison, and they gave him credit for 6 of the years he's already served. So basically, he was released immediately, and then he boarded a plane to it was a U.S. Pacific territory. I forget exactly where it was, but somewhere between England on his way home to Australia, where he formally entered that plea, and he's now back home in Australia. And of course, on a political and Bitcoin-related note, it does not take a rocket scientist to make the connection between the fact that both of the major candidates, well, the major Republican candidate and the major independent candidate, Donald Trump and RFK Jr., that are trying to defeat, unseat Joe Biden, they both pledged to pardon Julian Assange if they were elected president. And it doesn't take a whole lot to draw the conclusion that the Biden administration saw that this was building momentum, that this was a weakness for them, that the whole Assange thing was hurting them, especially with younger voters. Democrats in the United States rely on the younger vote, the 24 and under vote heavily to help put them over the top. And Bitcoiners also tend to be in that demographic, and Bitcoiners tend to value things like freeing Ross Ulbricht, freeing Julian Assange, freeing Edward Snowden, or pardoning Edward Snowden. And apparently that message got through to the Biden administration, or at least the desperation to not lose the election in November got through to the Biden administration. And Zero Hedge called this out on Twitter, tweeting, "What's next? Biden replaces the dollar with Bitcoin as reserve currency," which is a retweet of their tweet earlier in the day saying, "Imagine what the real polls must be like for Biden to agree to this," referring to the plea bargain with Julian Assange. Of course, the Trump derangement syndrome crowd was all over X, spouting that Trump didn't pardon Assange in 2016, so the last 8 years are completely his fault. And, of course, placing no blame on the Biden administration, which is complete and utter nonsense because, yes, Donald Trump could have pardoned Julian Assange 8 years ago. But it wasn't until Bitcoin became a campaign issue that the subject of pardoning Assange was ever seriously considered by anyone in power in Washington, D.C. It only really became mainstream, and chances are Donald Trump didn't even know much about the Julian Assange issue. It was an afterthought, if anything else. It was certainly not as important as dealing with the economy or dealing with border security or crime or any of the things that the polls have shown were the most important to American voters. So I would posit that it's something that didn't even really cross Donald Trump's mind until us Bitcoiners, you plebs, made it an important election issue. And need I remind you that Joe Biden was vice president of the United States when this whole ordeal began, and that not only was he vice president, but the same people that were running the White House, the same people that were running the executive branch when Obama was president, are the same people that are in charge right now. Sure, Obama was the figurehead then, and some would say Biden is even more of an empty suit, more of a figurehead, just a figurehead now, because we all know he has major cognitive deficiencies. I mean, he's really old. You can't blame him. I mean, I would be feeling pretty darn good if I was still alive and kicking when I was over 80 years old. But I also wouldn't expect to be president of the United States. Again, that's a tangent. My point being, the day-to-day operations of the United States government are not dictated over, micromanaged by President of the United States. There's chiefs of staff, cabinet members, deputy cabinet members, assistants that run the government on the day-to-day basis. And those are the same people that were in charge during the Obama years that decided to go after Julian Assange for basically throwing egg on their face and exposing the war crimes that the United States government had committed. Furthermore, I think the fact that they made Assange kiss the ring, so to speak, to bow down and plead guilty in exchange for his freedom tells you just how bitter of a pill this was for the Biden administration, just how much this decision stings, because he could have come out and said, "I pardon Julian Assange," and people would have applauded that, and it would have neutralized this as a campaign issue, at least that part of this as a campaign issue, because he could have taken credit for pardoning Assange, and he didn't. they let him plead guilty, and they released him. But I mean, that just seems like sour grapes. I mean, that's kind of the non-apology apology, where you don't say I'm sorry for what I did to you. Say I'm sorry for how you felt about what I did to you. But again, I digress. The most important thing is that Julian Assange is free, despite the fact that the nasty precedent of our government going to war with the press when their dirty laundry is exposed is still hanging over their heads. So it would have been nice to see a pardon, because, the chilling effect that this has or should have on the media, because, they didn't drop the hammer on the person that exposed all these documents, that gave these documents to WikiLeaks. That was Bradley Manning, now Chelsea Manning. At the time was Private First Class Bradley Manning, was in the Army, and gave all of that information to WikiLeaks. They hammered the person, they hammered the reporter, they hammered the media organization that published it. So, the American left cut their teeth in the 1960s and 1970s protesting the Vietnam War. They had the whole Watergate scandal, and there was the whole Pentagon Papers thing and the issue of prior restraint, where they made a big deal of you can't go after the newspaper for publishing the Pentagon Papers. You have a constitutional freedom of speech to publish, even stolen documents in that particular case. And how quickly they forgot all of that when it came to Julian Assange, because those 1960s radicals are the current Democratic Party. They were the Obama administration when they decided to go after and prosecute Julian Assange. Also, it is important to remember that a lot of this ties directly into Bitcoin. If you are relatively new to Bitcoin, or even if you've been a Bitcoiner for a few years now, you might not know just how big the connection between WikiLeaks and Bitcoin is. It's basically widely believed that WikiLeaks turning to Bitcoin for its funding after they had the Operation Choke Point style screws turned and cut off their funding, cut off the people's ability to donate US dollars to WikiLeaks when they turned to Bitcoin. It's widely believed that that's what led Satoshi Nakamoto to disappear, to turn over Bitcoin and disappear and preserve his anonymity. In fact, one of his more famous Bitcoin Talk forum posts, he referred specifically to WikiLeaks doing this, and he referred to it as kicking the hornet's nest. And it was his second to last post ever. I mean, just a day later, he made his final post and disappeared forever. And not the final post, but that second post read, "WikiLeaks has kicked the hornet's nest and the swarm is headed towards us." So that was in relation to WikiLeaks accepting Bitcoin. A week prior, Satoshi waded into the debate on the Bitcoin Talk forum because people were talking about WikiLeaks accepting Bitcoin and that this is a bad thing, the whole kicking the hornet's nest thing. And somebody replied, "Bring it, Bitcoin's ready for the fight." And Satoshi actually replied directly to that, saying, "No, don't bring it on. The project needs to grow gradually so the software can be strengthened along the way. I make this appeal to WikiLeaks not to try to use Bitcoin. Bitcoin is a small beta community in its infancy. You would not stand to get more than pocket change, and the heat you would bring would likely destroy us at this stage." So the relationship, of course, WikiLeaks went on to accept Bitcoin, and Satoshi posted the "You've kicked the hornet's nest" post, and then disappeared, and the rest is history. And of course, we're at the stage now where the governments can't defeat Bitcoin, that Bitcoin's going to continue on, tick, tick, next block. It's an unstoppable force. But at that point in time, Bitcoin was very new. It was in its infancy. We're talking 2010 here, or 2014 here, 10 years ago. And anyway, the Julian Assange story has been infinitely tied into Bitcoin. And now that he's been released, it's come full circle, because the media is reporting, for example, this Forbes article, Julian Assange's family is raising funds for him with Bitcoin. Bitcoiners can now support Julian and his family by donating to a BTC Pay instance in either on-chain Bitcoin or Lightning. Lightning, of course, being something that didn't exist when this whole WikiLeaks thing first went down. Gizmodo reported just a couple hours ago, Julian Assange receives $500,000 Bitcoin donation as he officially becomes a free man. Assange has raised nearly $1 million in combined crypto and fiat currencies this week. So just in the first day of his freedom, Assange has raised $1 million to support him and to support whatever he chooses to do with his life, or to continue on with WikiLeaks, whatever that may be. But of the $1 million that have been raised so far, over half of it, $500,000 of it, has been in Bitcoin. So the Bitcoin supporting WikiLeaks, Bitcoin supporting Julian Assange, Julian Assange's involvement in Bitcoin has come full circle. And don't forget, there are actually those who think Julian Assange may actually have been Satoshi Nakamoto. I don't think I put a lot of credence in that. Of course, we don't know. And there are those who say we were all Satoshi Nakamoto, everybody except for CSW. So in some ways, I guess maybe if you believe we're all Satoshi Nakamoto, then in some ways Julian Assange is. But there are those who credibly believe that Julian Assange actually was Satoshi Nakamoto. More people believe it was Hal Finney, and there's a few other candidates that come to mind as well. But I digress. Julian Assange has been intimately intertwined, and his saga has been intimately intertwined with Bitcoin for almost as long as Bitcoin has been a thing. Besides RFK Jr. and Donald Trump, their campaigns announcing pro-Bitcoin platforms, Bitcoin continues to become even more important political issue at the legislative branch of government, for example. Yesterday, Florida Representative Matt Gaetz posted on Twitter, breaking, "Today I introduced groundbreaking legislation to modernize our tax system by requiring the United States Treasury to implement a program to allow federal income tax to be paid with Bitcoin. By enabling taxpayers to use Bitcoin for federal tax payments, we can promote innovation." And the post goes on, and he links to a Daily Wire article that basically talks about the same thing. But again, just a couple of years ago, you would have never thought this in a million years, that the presidential election this year might come down to Bitcoiners based on which candidate is more pro-Bitcoin. You wouldn't expect a senator, a congressman to be introducing legislation to require the Treasury to accept Bitcoin. I'm certainly not paying my taxes in Bitcoin, not when I can pay with worthless fiat dollars. Why would I give them the most valuable asset I hold to pay my taxes that the government's just going to waste, that they don't even need anyway because they're printing the US dollar to oblivion, and they print everything they spend. What they take in income taxes is just peanuts compared to what they print anyway. But this is an important step forward, because obviously if people did start paying their taxes in Bitcoin, it would make the government would have a pretty darn big incentive to support Bitcoin. They certainly wouldn't want to try and destroy a big source of revenue for the government. And of course, we would have to see maybe some of those capital gains requirements relaxed on Bitcoin, because, if Bitcoin were truly treated as a currency, then there's the de minimis rules that apply to other currencies where you don't have to pay a capital gains if you have a gain of $500 or less on any particular currency transaction. And this I don't expect this to move forward. The Republicans are in control of the House of Representatives, so maybe it gets tied into some legislation in the House. But, the Democrats and Elizabeth Warren are solidly in control of the Senate, the other half of the legislative branch, so I would not expect to see this go anywhere. Matt Gaetz, even as a Republican, is not, he's considered one of the more fringe Republicans. So he's not taken as seriously as some of the other Republicans. Doesn't have as much power as some of the other Republicans in the House. But it's something that we wouldn't have even dreamt of just a couple of years ago. And that is just showing how far the Overton window has shifted in a very, very small amount of time. On to the price news. Last week we had mentioned there was a lot of FUD around Germany sending a couple of $1 billion worth of seized Bitcoin to exchanges, and maybe that was responsible for some of the price pullback, and perhaps it was. But this week we got back around to the tried and true Mt. Gox FUD. A day or two ago, the narrative changed back to the Mt. Gox coins, a FUD that has been recurring for a decade or so. That any day now, the creditor is going to release the Mt. Gox funds. Eventually it will happen. Whether those funds get sold, because most of the people that were Bitcoiners in 2010, 2014, the early years of Bitcoin have seen massive gains on their Bitcoin. And I don't think they would be in too much of a hurry to dump their Bitcoin. Although, it is a lot of money, so maybe some of them will dump a little bit to live off of. But I don't think there's a single person who's had enforced hodling through the whole Mt. Gox saga this long that would look at it and go, now's the time to bail, because Bitcoin's going to fail any minute now, and I don't want anything to do with it, so I'm going to wash my hands of Bitcoin. Of course not. They've seen, and that's why they're so bitter, because they've seen what that Bitcoin would have done had they not had it tied up, and had they gotten back one for one instead of getting back, a percentage of whatever the value was of Bitcoin on the day they filed bankruptcy. I don't think that many people are going to dump their Bitcoin, but nonetheless, Yahoo Finance reported today Bitcoin nears $62,000 amid Mt. Gox customer repayments. They go on to mention that there's 140,000 Bitcoin that are getting ready to be released back to the claimants. Of course, most of those claimants, some of those claimants are funds that that bought the right to people's claims, paid them out whatever percentage they agreed to pay them in exchange for their right to the settlement if it should ever occur. The Block says Bitcoin price this is 2 days ago, says Bitcoin price drops as investors sell the news on Mt. Gox repayment announcement, analyst says. And the article goes on to say Bitcoin's price suffered a pullback on Monday, dropping over 5% in daily trading following Mt. Gox's announcement to distribute $9 billion in Bitcoin and Bitcoin Cash repayment starting in early July. I would fully expect everyone to dump all their Bcash. That does seem like a no-brainer. But Bcash is only worth like $300 a coin anyway, and I can't even believe it's worth that much. It's, I expect Bitcoin SV to eventually completely die, and Bcash, I think, is so closely tied to that same. I mean, it was a fork of Bcash, so Bitcoin SV was a fork of Bcash, but there's enough intertwining there in the beliefs and the sort of people that caused the fork in the first place. I would expect Bcash to eventually suffer a similar fate. But I digress. The article continues. The price of the world's largest digital asset by market cap has slipped close to the $60,000 mark, its lowest level in almost 6 weeks. Bitcoin's move lower comes as defunct Bitcoin exchange Mt. Gox is set to start distributing Bitcoin and Bitcoin Cash repayments in July, according to a notice sent by rehabilitation trustee Nobuaki Kobayashi. I'm not even going to try and pronounce that, but the rehabilitation trustee on Monday. Cointelegraph puts a little bit of perspective on this with their headline, Mt. Gox repayments won't be as bad for Bitcoin as you think. They go on to say basically that this is already priced in. This has been coming for 10 years. So it's not going to have as big of an impact as people are worried about. Either way, we're really, really, really early in this halving cycle. We shouldn't have even had the bull run yet, and yet we're still hovering around what the previous all-time high was. Pretty darn close anyway. More than double the cycle low. And we're just getting started. As I've always said, if history were to repeat or rhyme, we shouldn't have eclipsed the previous all-time high until sometime this fall. And it's usually a year to 18 months before we set the ultimate all-time high. So maybe in 2025, we should be talking about all-time highs, at least cycle all-time highs. And here we are, still worth more than $60,000 per Bitcoin. So it's all relative. And of course, most importantly, if the price does get fudded down, that just means you and I have been given a golden opportunity to stack more sats than we were able to last week, more sats than we thought we were perhaps ever going to be able to stack again, because as Bitcoin does explode past 100,000 or 200,000 or 500,000 or wherever it ends up this cycle, you're going to get dramatically fewer Satoshis per dollar than you're able to get right now. And ultimately, all that matters is the size of your stack. When we do achieve hyper-Bitcoinization, when you are on a Bitcoin standard, when you're on zero instead of off zero, the number of sats that you have is all that matters, not the US dollar value. More positive news. A couple episodes ago, I mentioned that the Motley Fool had endorsed Bitcoin, that they pointed out that it was the single best investment you could have made in any time frame that you look over the last 10 years. And I mentioned how important that is because how many of the boomers I know get their financial and investing advice from the Motley Fool or from these traditional newsletters. Well, about 6 days ago, a day after the last DCA Wednesday stack, not necessarily after the episode, since it did come out late, the Motley Fool ran the headline, "Should you buy the Bitcoin dip?" And they go on to say that Bitcoin is no stranger to pullbacks, and like every past one, this latest instance presents a potential buying opportunity for long-term investors. So now even the normie, the boomer Motley Fool is basically saying BTFD. They're pointing out to your boomer relatives that this is an investment opportunity. And if the Motley Fool is telling boomers to buy the freaking dip, then obviously, hopefully you're doing so as well. Again, that's their financial advice, not mine, but I'm certainly going to BTFD. All right, speaking of BTFD, let's get on to what makes today and every Wednesday so special. And that is that today is DCA Wednesday. And what is DCA, you might ask? Well, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. So unlike BTFD, where you want to ape in because Bitcoin's on sale and you're going to be able to stack some more sats, and you can do that as well on the side, but DCA is being deliberate. It's the slow and steady wins the race kind of mentality. So you invest in equal portions, and for this podcast, what we chose as our equal portion was $20. I wanted to keep it simple. I wanted to keep it small enough that we could show that regardless of where you're listening from, for as little as $20 a week, you could build an appreciable stack of Satoshis. Obviously, again, this is a you do you thing. If you're a Michael Saylor type, obviously you wouldn't DCA $20 a week. You stack whatever is appropriate for you. But I wanted to show for the plebs listening out there that $20 is a lot of money, that it might be a big deal to come up with $20, that even that $20, even if you can't invest $1,000 a week or $100,000 or $1 million or hundreds of million like Michael Saylor invests, even $20 a week can make a difference. Of course, our regular interval is weekly and Wednesdays. And along those lines, this is going to be our 153rd stack. We started stacking every Wednesday back on July 28th, 2021. So just over a month from now will be our 3-year anniversary of our very first DCA Wednesday episode. And so far, we've stacked 152 Wednesdays and converted a total of 3,040 US dollars into a stack of 9,483,644 sats, and we've done so at an average purchase price of $33,055.19, which when you look at the current Bitcoin price and you're panicking because Bitcoin's in the $60,000 range, our average purchase price is basically half that. I mean, the price of Bitcoin is almost double what our average is. And we've achieved that even though we began this journey in between the double tops of the previous cycle. We bought all the way up to the previous all-time high. And of course, we bought all the way down to the bottom. We bought the crab market, and now we've been buying on the way back up. But as a result, because we were making our purchases and we spread them out, our average purchase price is a nice, smooth $32,055.19. And to add to today's stack, as usual, I'm going to use the handy dandy Cash App. Cash App is not a sponsor of the show. They probably should be, as often as I've promoted their app. But the reason I use Cash App is because I think it's super easy. It may or may not be available where you're listening. And it's certainly not the cheapest method for stacking. They charge a slightly higher fee. But if you're only stacking $20 at a time, that fee is relatively negligible. And they will eventually let us transfer, when we choose to transfer our Satoshis to our hardware wallet to cold storage, they let us do so for free without charging our mining fee. So if we were stacking larger amounts and the fee they charge us were to start adding up, then maybe I would use an exchange that charged a lower percentage fee. But for example, if I were using Coinbase Pro, I would pay a much, much smaller fee for today's stack. But then when I went to transfer it, I'd have to pay a mining fee. And of course, they don't give you the cheapest mining fee. They overestimate often. So there were times when that mining fee was like $25 or $30 just to move your Bitcoin. So I don't know what Coinbase will charge you now, but probably a couple dollars. And that will certainly make up for the 40 cents that we're going to pay in fees for doing today's stack. So I've already got my Cash App open, and I have money on my Cash App. Somebody reimbursed me for something that I purchased for them the other day. So it's as simple as tapping on Bitcoin, tapping buy, entering $20, tapping confirm, and boom! Just like that, we've added another 32,178 sats to our stack. Bitcoin went down just a tiny bit while I've been talking. We purchased at a US dollar value of $60,755, so just under $61,000. But that 32,000, that, by the way, that's almost 2,000 sats more than we stacked last week. Last week, that's more than 32,000 sats more. Last week, we stacked 30,143 sats. This week, we got 32,178 sats. So 2,035 sats more for the same amount of fiat. While fiat has been depreciating, while inflation has been devaluating the US dollar purchasing power of that $20 because of this dip, we actually purchased more Satoshis. And that is really cool. That makes me super, super happy. And this is kind of a milestone for us. Those 32,000 sats put us over 9.5 million sats. Our stack is now 9,515,822 sats. It did raise our average purchase price by about $101, $101.78 to be exact. So our average purchase price is now $32,156.97. Still not too shabby, all things considered. And, we talked a lot about where Bitcoin might go in this halving cycle, or where it'll go eventually when we achieve hyper-Bitcoinization. A couple weeks ago, Fidelity ran that article that it was reported, that Fidelity's Julian Timmer had said that he thinks that Bitcoin will hit $1 billion or more ultimately. But if Bitcoin just goes to $100,000, our current stack, without adding a single new Satoshi, would have a US dollar fiat value of $9,515.82. Not too shabby considering we've only converted 3,060 US dollars into Bitcoin, and that we did so at just $20 a week. If Bitcoin goes on to hit $1 million, which is kind of a lot of people's moon, but really there's plenty of people who think Bitcoin will go a heck of a lot higher than $1 million. Some people forecasting it'll hit $1 million this cycle. Others saying maybe by 2030. But either way, when Bitcoin does hit $1 million US dollars, that stack would be worth $95,158.22. A hell of a return for 30,060 US dollars. And if Bitcoin does hit Fidelity's Julian Timmer's $1 billion mark, that $3,000 worth of fiat would have turned into a stack worth $95 million. And that would be life-changing money. I don't care who you are. 95,158,220. All for investing just $20 a week. And of course, we're not going to stop there. We're going to keep investing. Of course, we're going to keep buying the dip. I don't ever include that in our stack. None of my BTFD purchases are included in that $9.5 million. We did that $9.5 million just on our Wednesday DCA purchases. And we're going to keep stacking sats every Wednesday as long as someone out there is willing to sell us Bitcoin, willing to sell us Satoshis for US fiat. So before I go, again, I want to ask you to help support the podcast. And there are several ways you can do so. And I'm not necessarily talking about the value for value model where you can stream us sats or you can send us a boost. I'm also talking about feeding that algorithm monster. One of the biggest ways is by following us on Twitter or X. We are at BTC Bulletin Pod, Bitcoin Bulletin Podcast, abbreviated to at BTC Bulletin Pod, POD. And of course, we don't have a whole lot of people following us on Twitter. I don't spam Twitter a whole lot. I posted a couple things today. I posted that it was DCA Wednesday, and I posted a link to two of the things that I spoke about or that I was going to speak about in this podcast. But other than that, I know not to spam you. I don't want to alienate our podcasters. I don't do a lot to promote this podcast in general because, I want to grow this thing organically, and we have. If you enjoy listening to what I have to say and you agree with me, or even if you disagree with me, but you just enjoy listening, or you find what I have to say valuable, then that's what matters, and that's how you grow a reputation, not by being a shill, not by being a self-promoter, not by promoting not by going on other podcasts to advertise, to talk about your podcast, or spamming people. And I'm getting off on another tangent, but if you follow us and if you're not already following us and you follow us at BTC Bulletin Pod, that helps feed that algorithm monster, which means more people are likely to see our tweets. And since our tweets are meat and potato tweets about this podcast, maybe you'll help orange pill somebody just by subscribing. Not subscribing, sorry. We do not offer subscription services on Twitter. That's another thing that I do not like. Influencers that want you to be a subscriber. I'm just asking for followers. And if you follow us, that will help feed that algorithm monster, and maybe more people will see our tweets. You can also help support the podcast by liking, rating, or reviewing this podcast, depending on where you're listening. There are different ways to do that. But for example, on Spotify, you can rate the podcast. They let you rate it like 1 to 4 stars. That helps feed that algorithm monster. Apple Podcasts lets you review podcasts as well. But most importantly, last January or so, Apple Podcasts changed the way that they stream their podcasts to you, and they started disabling automatic downloads if you don't listen to more than 2 episodes a week of a particular podcast. So since we only do 1 podcast a week, We don't meet that threshold, so if you haven't already, double check that your automatic downloads are enabled, because that helps feed the algorithm monster. And if you haven't re-enabled automatic downloads, Apple probably disabled that. So you can support this podcast in numerous ways that aren't just that, other than financial. Of course, in our show notes we have referral links. For example, I mentioned Cash App is not a sponsor of the show, but we do have a referral code in the show notes. If you start using Cash App, or if you already do, you have your own referral code, because every user gets one. And if you do decide to use Cash App and you're not already using it, by clicking on that link and signing up for Cash App through the referral code, you can earn $5 free for doing so. And of course, the podcast will get $5 free as well. And that will basically, you'll be supporting the podcast. We'll get $5 that I'll immediately convert into Satoshis, and you'll actually get paid to do so. There are several other referral codes as well. For example, one for Strike, one for Fold. I digress. There are multiple ways you can help support the podcast without spending a single one of your precious Satoshis or a single cent of your fiat stack. But again, I digress. Mainly, the biggest thing you can do is just tune in every week for our DCA Wednesday episode, because the more listeners you get, the more consistent our listeners are. That helps promote the podcast as well. And we will see you next Wednesday and every Wednesday while we continue to grow that stack together, $20 at a time. And until that time, keep on stacking those sats, you sexy sat stackers.